sole proprietorship, or LLC. If you're a small business owner or are planning to become one, you've likely been confronted with this question. And granted, deciding what to register your business as is as difficult as it is confusing. Do I save more in taxes with one over the other? Should I even care? At this point, it's worth mentioning that there are other entity types, but generally, for small and medium businesses, these two are the most common. Hey, what's going on? Welcome back to Tax Premier. I'm your host, Johnathan Wood, where we dive into everything finance and help you pay the least amount of taxes possible. In this video, we take an in-depth look at each type of business structure, highlighting the similarities and comparing the differences. Most importantly, we answer all these type of questions, all these important questions. So like, subscribe if you haven't, and let's jump right in. First off, let's define the two terms. What is a sole proprietorship? A sole proprietorship is the most basic type of business there is. Now, generally, if you start selling a product or service without registering yourself as a limited liability company, partnership, or corporation, then you're automatically considered a sole proprietorship. Now, with that said, there are three features that define a sole proprietorship. One, the business is unincorporated and owned by one individual known as a sole proprietor. Two, in the eyes of the IRS, a sole proprietorship and its owner are the same. That means sole proprietorships are taxed at pretty much the same rate as individuals. And three, the business assets as well as liabilities are not separated from sole proprietors' assets and liabilities. So yes, you don't need a separate bank account. Now, with that definition alone, you can see why people love sole proprietorships. They are super easy to start, and there's no formal paperwork to fill and fees to pay, which is a huge deal if your funding is tight. Other advantages of sole proprietorships include 100% control. As the sole owner of your business, you are responsible for all decisions pertaining to your business, and of course, you pocket all the profits too. Now, you also have easy dissolution. Dissolving your sole proprietorship is as easy as ceasing to do business. However, you should probably also cancel your operating license and business name, also known as doing business as, or simply DBA if you have one. Also, the tax benefits, you get to write off your business expenses on your personal tax return, which can lower the taxes you actually owe to the IRS. These expenses should be included on the IRS Schedule C form, along with your business name, profit loss statement, and supporting receipts, which you then attach to your personal income tax returns for submission. Now, up to this point, we mostly talked about the good stuff, but just like anything else, there are a couple of not so goods. So what are the disadvantages of sole proprietorships? Unlimited exposure, the lack of separation of businesses and owner assets means that you're personally liable for any debts your business accrues, and defaulting can mean creditors will come for your personal assets too. Now, also the funding difficulties. If you plan to seek funding outside of your savings, keep in mind that convincing investors or creditors will be much more difficult as a sole proprietor. Also, limited growth potential. Remember, your business is solely dependent on you, and in an event that you're no longer in this world, it probably will crumble. Also, additional taxes. If the income from your sole proprietorship is above $400, you're also required to pay self-employment taxes. Plus, depending on your tax bracket, you may pay a higher tax rate. Now that you pretty much know what a sole proprietorship is and how it works, let's look at what is an LLC. LLC stands for a limited liability company. By definition from the IRS, this is a type of business entity allowed by state statute. That means LLCs aren't registered or regulated at the federal level, and the requirements for an LLC will vary with the state you're in. So if you're interested in registering an LLC, you'll need to file the necessary paperwork with the Secretary of State and pay the required filing fees. That said, this type of business structure stands out for its ability to combine the limited liability protection that's associated with a corporation while maintaining the tax advantages and flexibilities of a sole proprietorship. Now, so what are some of the LLC pros? Well, to start with, separate entity. An LLC is seen as a separate entity from its owner in the eyes of the law, and so are any decisions it makes. Also, personal asset protection. LLC assets and liabilities and those of its members are separate. That means when creditors sue for any defaulted debts, they are suing the business and not you. They can't come after your personal assets like your home or savings. Your liability as a member is limited to just what you contributed to the business. Now, this also means you shouldn't mix personal money and your LLC funds, but should maintain a separate bank account for your business. Also, having flexible management structure. LLCs can be managed directly by the registered members or passively by appointed managers. Also, better business credibility. LLCs are typically viewed as credible than sole proprietorships, which means it's easier to get credit and funding. Also, flexible taxation options. Lastly, LLCs can actually decide how they want to be taxed. Usually, LLCs are taxed pretty much the same as sole proprietorships, where members report income and expenses on their personal tax returns and follow the same filing process. However, they can also choose to be taxed separately, like a partnership or a corporation. Here, it's all about preference, and decisions should be informed by your income, goals for your business profits, and so on. What about the cons? Well, there are a few things you want to keep in mind before you go ahead and register an LLC. For one, the cost. LLCs come with a formation cost, which you'll need to pay when you're filing the paperwork. Other costs typically include name registration fees, publication fees, agent fees, and annual fees, which all vary depending on the state. And two, the paperwork with an LLC. You should expect to do quite a bit of paperwork initially and also periodically. Moving on, let's quickly compare a sole proprietorship and an LLC, starting with the similarities. First off, whatever type of entity you choose, you're legally required to report your business income and expenses to the IRS through the Schedule C form. Your business expenses will be deducted from your net income and don't qualify as itemized deductions. The resulting net income is what will be eligible for taxation. So keep records of everything. Also, in both types of business structures, you'll only need your Social Security number to file your taxes. However, if you hire one or more employees, you'll need a taxpayer identification number and will be required to withhold and pay payroll taxes. Lastly, with both entities, you can use a do business as, otherwise known as a DBA, which is basically an assumed name in place of your name for the sole proprietor, or legal LLC name for an LLC. Now for the differences start from the time the two entities are formed. While a sole proprietorship happens by default, you actually have to file paperwork and pay to form an LLC. There is a laid down process. Secondly, the process of setting up a sole proprietorship is pretty simple. In most cases, you only need an operating license, and if you want to use an assumed name, DBA. However, setting up an LLC are a bit more complicated and require state approval. Also, while both sole proprietorships and LLCs can have one owner, LLCs can also have multiple owners who are known as members. But perhaps the biggest difference, in my opinion, is how liability is defined. As we already discussed earlier in the video, there are no distinctions between personal and business assets in a sole proprietorship. That means liability extends to the sole proprietor's personal assets. In short, you can lose everything if your business defaults in debt, whereas in an LLC, we have what's known as a limited liability. So if the business defaults, you only risk losing your investment in it. So which one is right for you? It all comes down to the needs of your business. If you're a new entrepreneur still kind of testing out the murky waters of the business world, are in a slow growth niche, or do contractual work such as consulting, a sole proprietorship is much easier and less costly to start. The same goes if you don't anticipate bringing in partners on board in the future. However, if your business is fast growing and you need to raise funds to operate and expand, a LLC is a better choice. LLCs are also a great option for entrepreneurs who want to separate themselves from their business. Lastly, LLCs work well for relatively high-risk business ventures since they provide personal asset protection. All in all, you want to examine your current business needs and future goals to see which category you fit into before making that decision. So what do you think? Is a sole proprietorship better than an LLC or vice versa? We love to hear from you, so definitely drop your thoughts and comments below. And if you enjoy interesting educational videos on all things finance, subscribe and turn on your notifications to never miss an upload. Thanks for watching, and be sure to check out the video suggestion next.